Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is how to be a smart trader. You guys overlook some of these topics, I think, because the title's not as catchy as you want it to be, and some people don't watch the video because the title's not as catchy and the thumbnail's not as catchy and all that stuff. But I am telling you, some of these videos are gold. They are pure diamond gold, okay? How to be a smart trader. We're going to dig inside the charts. We're going to dig into different time frames as well. So you're going to see, for example, what a 5-minute chart looks like, but then what it looks like on a 2-minute chart. And what a 2-minute chart looks like, what it looks like on a 15-minute chart, and mix them. Why? Because using multiple time frames for your trading is extremely important. If you're not using multiple time frames and you're trading in a vacuum, you are going to get sliced and diced and chopped all around. Remember, the higher time frame is your bias, right? Higher, lower, sideways, and the lower time frame is your entry time frame. You must always do that. I see it happen all the time to traders. They get into a 2-minute chart, like, Jared, why did it fail? And I'm pointing at the 60-minute chart, like, that's why it's up 9 bars in a row at the 200 MA and at pivot resistance. Oh, I didn't look at that. Yes, I know. So multiple time frames, how to be a smart trader, better money management, better trade management, just better overall focus. All right, it's a challenging business, so you have to be focused to be good at trading. So today we're going to dig a little bit deep into that so you guys can kind of see what it looks like in different time frames and why that higher time frame is so important to the lower time frame. Guys, if you like these videos, please click that like button, hammer that subscribe button. All right, there's a lot of great content on here. Let the world know about it. Share it with your friends. All right, I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is being a smart trader. Okay, there's lots of types of traders out there. Sadly, the average trader is more like a gambler. I wouldn't even really call them a trader. They're really just a gambler. And you don't ever want to find yourself being a gambler. You want to always find yourself being a smart trader. Just because you're a smart trader doesn't mean you're always going to win. That's not what it means. It just means doing the right thing when you're supposed to do it. No, this is not a lecture on integrity. We already had that lecture. It's not a lecture on integrity. Okay, so we will not talk about that. But what we're going to talk about when I mean smart trader is letting the chart speak to you. Don't speak to it. So we're going to dig into the chart a little bit, and we're also going to talk briefly, very briefly, about why technicals are what we use. You know what I mean? Instead of fundamentals and so on and so forth. However, before we do that, and I made a mistake here, I have to delete this. Let's talk about what not being smart looks like. Okay, so when you're not smart, this is what it looks like. Okay. Contact inquiry, technical trading essentials, okay? Let's just skip down. Jared, are you able to reach out and help this person? Hi, Jared, I'm very interested. I've been trading for 3 years now. I made $2.3 million in the pot market in Canada, and then I lost $2.8 million doing stupid trades, okay? I'm desperate. I'm skipping along. I am desperate. Working on borrowed money now. I can't fail anymore or will lose my house. Guys, I think it goes without saying, you don't ever want to be in this position. Now, I want to clear a couple things up because I know you're thinking it. Why didn't they just quit when they were up $2 million? Let me help you with this. People that are able to turn very small amounts of money into $2 million have a problem, okay? It's luck. It's gambling. Therefore, when they get up $2 million, they think it'll be $3 million, then it'll be $4 million, then it'll be $5 million. They never pocket any money. They never just say to themselves, maybe I should put aside $100,000, or maybe I should pay my mortgage off and then I'll take the rest and trade with that. No, they don't do that. That's that gambler's mentality. That's the reason they were able to make so much money in the first place. It wasn't skill, it was luck, but it was that mentality. It's like risk everything all of the time. Risk everything all of the time. It's like an extreme version of the martingale approach, right? And now you see them, wow, you went from 2.3 up to 2.8 down. All right. And then lost 2.8. So really 500 down. My apologies. 2.3 million up to $500,000 down. Now I'm very interested in getting a more detailed course outline. What? So you actually thought this was skill when you were making it. Right there, there's a disconnect. Immediate disconnect. Okay? And I remember talking to this person through email. Okay? We went back and forth a couple times. Here's the craziest part of all. All right? I don't know what to say. I shake my head. They made 2.3 million, then they lost 2.5, right? They didn't want to get the PTS course. It was, quote, too expensive. They were looking for a lower level course, a mid-level course, one we don't offer really anymore. And I'm like, when you were up 2.3 million, you didn't think at all at any point in that time you should maybe take a little bit of money and get yourself a proper education. But now that you've lost $500,000 and you have nothing left, now you want the education and you don't want to pay for it. Common sense is a superpower. It really is a superpower. Okay? So don't be this person. Don't do this. I have one more for you guys. One more for you guys. Okay? 5,000 to 1.3 million in just 3 trades. Okay? In this case, this is an advertisement, by the way. This is an advertisement that I got. Okay? In this case, I'm talking about legal insider trading. Guys, legal insider trading. Okay? Traders who have consistently signaled, that's a key word, signaled 453%, 610%, and even 1,036% gains. Legal insider, but look at the word, consistently signaled. It doesn't say they made, they said signaled, okay? But we're going to get to the best part. Register for the imminent briefing right here. Some of you right now are going, where's the briefing? I want to sign up for that. You are. Come on, you are. Admit it. You'll see how just three of these trades, wait for it, could have generated 1.3 million in profits starting with a 5K stake. Note the words, very carefully used words, okay? In legal insider trading, signaled and could have generated. So this person didn't make this money. They're saying, oh, these trades that I talked about, that I signaled, could have made, could have generated, okay? And yet you can get all the details right here. Register for the imminent briefing here. Run away as fast as you can. This is a bunch of bullshit. All right, this is unfortunately what is wrong with this industry. Today's when will the insanity starts are what's wrong with the industry. Somebody making 2.3 million, guess what? All their family and friends want to know how to be a trader when they're up 2.3. When they lose the 2.8 million and now they're down $500,000, everyone's like, oh, you're just a gambler. That trading thing is just gambling. Well, yeah, because that person's a gambler. Then you see advertisements like this, emails like this, where people go, oh, 5K to 1.3 million in just 3 trades. Not 3 years, 3 trades. And now everyone's like, oh, I'm going to get rich quick. No, you're not. This business is hard. You're going to do it the hard way. Boots in the mud, up to your ankles, up to your knees, and sometimes higher sometimes. Don't do this. Anything worth doing in life takes time. I haven't met a single person that's very high level success, like ultra high net worth plus, that did it overnight. I don't know any of them. It took them decades to get to that level. It takes you years to get good at things and decades to get great at things. I'll repeat that. It takes you years to get good and decades to get great. That's what it will take, because that's the way it is in every aspect of life. Trading is no different. Let's move along now. So, on this note, let's keep this theme going. You guys have seen this. Some of you have, okay? Some of you have been around a while. You've probably seen this slide before. That's the market on the left. That's you on the right. But here's the rub. Many of you, when you're new, trade like this. You trade like you think you're the shark, right? You think your shit doesn't stink. You think you're so good. You trade like you're a shark, okay? The problem is you have no idea what you're doing. You're like a sheep in wolf's clothes, right? You're really a goldfish, but you're acting like a shark, and you have no business acting like a shark. You're out of your depth. right? You're out of your depth. The market is for real, okay? It's for real. And these are the companies, this is how they act. They are cutthroat. You are just like deer in the headlights, goldfish. You're a little beta fish. You're not even a snack for the market. You're not even as big as this shark's tooth, okay? So that's going to set the tone for today, the be a smart trader tone, because that's what I want you to think about it. Because it is the market versus you. And the market is made up of a lot of different facets, a lot of different things, okay? Don't get caught up in the fundamentals of the market. Don't worry. This is pretty much the last text slide. Everything else is charts after this. For those of you like, oh, I'm bored already, Jared. Most of them are chart slides after this. Guys, there's lots of companies that are quote unquote great companies, okay? And then they're not. Does that make sense? Then they're not. They're great until they're not. And this is why we have entry prices, stop losses, and targets, okay? So when you see an Enron or a Bear Stearns or a WorldCom or even a General Electric these days, right? You can see them right here. You guys have seen this chart before. This is before the reverse split. You heard me, reverse split. This hasn't been a great, this is where technicals become relevant. Even when you're investing longer term, you're looking at monthly and yearly charts. Take a look at them. Take a look at Citigroup. Right? This is not what it used to be. Okay, yeah, it's coming back up, but look at '07. It's a $600 stock, $500 stock. Now, granted, this is an older chart, couple, 2-3 years old, but my goodness, yeah, Aaron, GE used to be a great company. Jack Welch did a great job. Okay, lots of great companies fail, and I'm not saying that GE or Citigroup's going out of business. I'm simply saying, as an investment, it has not been a very good one. So we're going to focus more on charts and being a smart trader, not letting our ego get the best of us, having good money management, having good trade management, following our trading plan. So let's take a look. One of the first things that you need to do to be a smart trader, other than money management, because today I'm not going to talk much about money management. We're going to talk mostly about charts, okay? When all time frames are in alignment, trading odds increase. I think increase is one word. Boom. All right. Trading odds increase, but this rarely occurs, right? It really does. I mean, to get 3 or 4 time frames in perfect alignment with the market is quite challenging, okay? Trend analysis teaches you an objective method to determine what the trend is. See, we had this conversation a few weeks ago, maybe it was a month ago. If you don't know what the market is doing or what it's likely to do next, it's very hard to be a good trader. So understanding the market stages, stage 1, 2, 3, 4, we talked about this a few weeks ago. Guys, there's a reason I put these lectures in this order, okay? So once you know the market stages, now you have a good understanding of the next move of the market, which helps you pick which side of the trade you should be on, but multiple time frames helps you pick the trade you should be in, right? The market helps you pick what side you should be on, higher, lower, neutral. Multiple time frames helps you pick which individual stock you should be trading. So you must decide what time frame you will trade in and which time frame you will gain a long-term bias from. This is everything. Your actual entry time frame, your trading time frame, and your bias time frame. Okay? Then apply trend, supply and demand, and bar by bar analysis to find trading opportunities in that time frame. And that's what we're going to do here. Okay, we're going to take a look. Now, again, some of you have been through a couple of these slides. I think the last time I brought these up was, 3 years ago. It's been a while since I brought some of these slides up. All right, but I want you to keep this in mind all the time. Trade entry time frame, bias time frame. Entry time frame, bias time frame. Say it one more time, loud and proud. Entry time frame, bias time frame. Too many of you are sending me emails and going, Jared, why did this 2-minute 3-bar play fail? And I look at the 60-minute chart and I'm like, well, maybe because the 60-minute was up 6 bars in a row into overhead supply with the 200-period moving average sitting above you. Oh yeah, I didn't see that. Why not? Because I got so caught up. Remember we used the whatchamacallit, not Talladega Nights, you're killing me, Days of Thunder analogy. It's different when you're on the track by yourself, right? That's the 2-minute chart when you're on the track by yourself. But when you're on track with 40 other cars, that's the 60-minute, that's the daily, that's the bias time frame. Okay? You need to get it right. If you get it wrong, your trade will likely not be successful. Get used to looking at 3 or 4 time frames all the time. Get it so ingrained in your head that you won't even look at the 2 before you've looked at the 15, the 60, and the daily. Put them all on the same chart, right? All on the same screen. So when you look at one, you look at all. You look at all, you look at one. You look at them all. Always. All the time. Okay? I'm hammering this in because most people don't do it. Right? I know I'm beating a dead horse. I get that, but most people just don't do it. Okay? So, what do we see here? I want you guys to talk to me. Just tell me what you see. I'm not trying to trick you or fool you or do anything slick or sly. What do you see? Somebody says they see topping tails. Okay? Somebody else, 2 folks say they see an uptrend. Third person, uptrend. Very extended. Buy, uptrend. Looking for stage 3 next. Okay. I would agree. This looks like a power trend higher, right? It looks like a power trend higher. I mean, that's what it looks like. And that's what you should be saying because it's what it is, right? It's not subjective here. The past is over. We can see the past. We're not trying to predict the future anymore. We see it. Okay, it's an uptrend. It had a little lower low right here and then kind of an equal high. And after this area right here, it put in a higher low and a higher high and 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 a higher low and a higher. Are we done? Yes. How many higher lows and higher? I don't know. 6, 7. It's a power trend. Okay, power trend of buyable pullbacks, as PJ says. Okay. Lots of them. Lots and lots of them. This one specifically being very, very nice right here. Okay? Another nice one over here. Another nice one over here. There's a lot of them. That's what you see here. But I tricked you. And I'm not saying you're wrong. You were right. But this is really what you saw. You're still like, so? You just cut it into 3 pictures, Jared. That's all you did. It's the same chart. You just cut it into 3 pictures. I didn't. They're 3 different charts. You just looked at 3 different charts that I sewed together. Okay? There's a method to the madness. I just sewed these 3 charts together. Okay? Literally. These are 3 completely different time frames of the same stock. 3 completely different time frames of the same stock. So, same info, different time frame. Different time frames provide different pictures. This goes back to our multiple time frame talk. If you're not looking at multiple time frames, you're in trouble. If in your mind you are not thinking about what would this look like in a different time frame, then you're not doing your job, right? A 5-minute turnaround bar, a 5-minute engulfing bar could very well look like this, right? And obviously green bar, green bar, green bar, but you get the point, right? This wide range red bar could very well be 3 red bars down and maybe even a green bar, although it would probably leave a bottoming tail, right? Okay. And then you might see 1 green bar, you might see 5 green bars, you might see 2 green bars, but the point is, as soon as I see this turnaround bar, I immediately want to know, how did it form? Remember we talk about that in professional trading strategies? It's not just where we are, it's how we got there. So it's not only what is happening, it's how it is happening. What is happening is a turnaround bar. How it happened, I do not know unless I drill down. And if I do not drill down, I won't know the quality of this turnaround bar. I'll tell you why. I really honestly don't want 1 2-minute wide range green bar here. I really don't want that. What I want to see is a green bar with a little bit of a resting period and then a move on. Why? Because it makes this turnaround bar much more valid. Now, I'm not saying you can't buy this turnaround bar and put your stop down here. I'm not saying you can't do that. I'm simply saying with more information, it gives me more or less confidence. Not only more or less confidence, it also helps me with my stop loss. I might possibly, depending on the lower time frame, I might be able to get a tighter stop loss. There might be a little 2-minute pivot right in here. And that 2-minute pivot might allow me to raise my stop loss, because one of the issues with turnaround bars is wide stop losses. It's hard to get a good quality risk to reward with a turnaround bar. So you should always be thinking, what does it look like on a lower time frame? What does it look like on a higher time frame? Because different time frames provide different pictures. And this is what I mean. This is that chart you just saw, reading inside the candle. We have a 2-minute, a 5-minute, a 15-minute. So the lower low right here, that's actually the 15-minute chart. And then I added the other charts to it to make it one string of a chart. But really, everything you just saw, let's go back. I want to show you. Everything you just saw right here is actually right here. All this future information, right? If I was to draw a line right here, draw a line right there, take this whole future right there, all of it, it really happened right here. All of it happened right here. Everything you're seeing happened right there. Okay, let's go back down to it. Guys, a 15-minute chart, every bar is 7.5 2-minute bars. Every 15-minute bar is 7 2-minute bars. So if we have 3 15-minute bars, that's 21 2-minute bars. 3 5-minute bars for each bar. That's 15 5-minute bars. Okay? So right here, now you have to ask yourself, is this worth it? That's a tough question, isn't it? Because now you have a stock that kind of looks like it's in a downtrend, doesn't it? Right? Topping tail. You have first, before the topping tail, you had a lower low here, right? Compared to here, you had a lower low. Then you get a topping tail, a little bit of a kind of a sell setup, right? On the bottom 15-minute chart, a sell setup. We put in a lower low. Now that you get a wide range green bar, that's bullish, but that bar was immediately followed by a red bar. And that red bar becomes this. See this red bar right here? That's this bar right here. Okay? This green bar, that's those 3 bars right there. This green bar in the 15-minute are these 3 bars right here. This red bar are those 3 bars right there. This green bar are those 3 or 4 bars right there. So now I ask, would you buy that? Audience participation, the 5-minute buy setup. Would you buy that? Yes, no, not sure? What do you think? Fascinating, isn't it? Lots of indecision, lots of no's, some yeses, but the first chart was all yes power trends, power trends. Everyone was pretty much on the same page when I showed you the first chart, right? The one where I connected them all together. Now there's a lot of indecision. So you got to ask yourself, why would you buy a 5-minute buy setup inside of a 15-minute downtrend? I want to ask a genuine question for all the yeses. Why would you buy a buy setup on a 5-minute inside of a 15-minute downtrend? Do you guys remember in professional trading, there's a slide in there called Rules to Never Break. You never go long in a 60-minute downtrend until or unless it puts in a higher low. Okay? So when you look at this, you sit there and go, wow, the 15-minute put in a lower low. Why do you think it's a valid entry? I'm just curious. Why? Guys, really give this some thought for a moment. Really. You have a lower low and a lower high and a lower low. Okay? Now we get a green bar that goes about 50%. It does not penetrate more than 50% back into enemy territory. 50% in a stock in a downtrend. And then, boom. Here's the question. When you take that buy setup right here, right there, see it? Right here, I'm pointing at it right there. You take that buy setup. Okay, hold on, let's make another. Where on this chart here are you actually entering? Probably what right about there? See where I drew the arrow? Let's make the arrow a different color. I don't know, let's make it orange. Okay? So you feel really good? You feel really good about taking a 5-minute buy setup in what looks to be a bona fide 15-minute sell setup. What? Have you guys not watched, listened to, or learned from professional trading strategies? You are literally taking a 5-minute buy setup in a higher time frame sell setup. Inside of a higher time frame setup. Now watch, there is a method to my madness, because every one of you that said yes, your hand's going to be in the cookie jar in about 5 minutes. And you're going to be like, but it looked different on that slide, Jared, but this slide, Why? Answer me why you would do such a thing. Seriously, is it because you can't find a 5-minute buy setup that has a 15-minute uptrend? Because otherwise, why are you doing this? What would be, give me a good reason why you would do it. The only reason, and it ain't a good one, is because you couldn't find anything else to trade. Or you're an undisciplined trader. Right? Why else would you take a 5-minute buy setup inside of a 15-minute sell setup? Why would you do such a thing? And so many of you said yes. Here's one of the reasons. I'll tell you why. Because it worked. And you saw the future. I showed you the future. But you don't have the future in real time. You don't have a time machine, a DeLorean. You don't have that. You literally are telling me 40% of the people said yes, I would take that. But you're going to take that inside of a bona fide 15-minute sell setup in a downtrend. Wow, this is tough. These are the types of trades you look back on and think, did I really need to do that? Was this the best I could find at the time? And if this is the best you can find at the time, you should probably sit on your hands and wait for a better opportunity. You'll get away with it. In this particular case, you did get away with it. Right? So I look at this and I say, no way. If that had a double bottom retest, maybe. And that's still tough. But this clearly had a lower low, had a lower high, and a lower low here. You're in a downtrend. That's a tough one. So now let's move along. Let's move along to this little orange box right here. Okay? We have a little red bar. That red bar is this pullback on the 2-minute. Okay? That red bar is this pullback on the 2-minute. Okay? And that over here is this bottoming tail on the 15. Now, would you take the 2-minute buy setup? No one's going to answer. Everyone's like, you know what? I'm going to keep my mouth shut. Would you take the 2-minute buy setup? I'll start by saying this. It's absolutely positively better than the 5-minute buy setup. Okay? It's better than the 5-minute buy setup. The failure of the 15-minute sell setup is bullish, but we're still in a downtrend. True? We are still we failed the 15-minute sell setup. That's a bullish sign. For me, this is a scalp, like you're a scalp trader type play. Like I'm not married. And you even see here, it almost shook out right here, right there. It almost shook out. So while yes, you could take it, you are still taking a buy setup inside of a 15-minute downtrend. Yeah, it broke the sell setup. It failed, right? The sell setup failed. That's good. That's a good sign. It's a good sign. But you're still in a downtrend. That's tough. What's the expectation? It shouldn't be a big one, right? So other things might matter. What the 60 or the daily is doing, what the market might be doing. But the one thing here is this. While some of these trades could be justified, you want to ask yourself, why? Why am I making it so difficult on myself? Wouldn't you rather just take a Peloton trade that you know has a great gap, that you know has relative strength? Like, wouldn't you rather just take that? So while I am agreeing with some of you on the 2 minute saying, hey, there's probably some reasons you could justify this. But then you got to go back and go, why? Why do I make this business harder on myself than it needs to be? You get away with it sometimes, right? But it's always better to take the obvious one. So now, let's do this. Let's talk about this. Okay. Professional trading strategies, folks. You know this slide. I expect perfection from you. So we have a stock that gaps up, moves higher. So we have our little micro stage one. This is a 2 minute chart. 2 minute chart. Micro stage one, stage two, micro stage three, double top, right? Micro almost stage four, almost, right? We have a lower low right here and a lower high here and a lower low here and a lower high here. So this lower high would consolidate, or would basically turn this into a stage four downtrend. Okay? PS has taken PTS, right? So now we have a double top retest. We have broken below the 20 period moving average. We have a lower high and a lower low, and another lower low, and almost a lower high. Stage four, right? Question mark, stage four, close. Stop loss up here, entry here, good trade. All right, talk to me. Good trade. I mean, that last 5 minute one was a good trade, right? What's the answer here? Felix says, I like it. Okay. I'd wait for the higher low for more confirmation. Retest on the higher time frame. Okay. I'm looking for basically a 2-word answer. And you guys, some of you are saying it, in a longer form. I'm basically looking for, the answer is more information. More information. I can't say no. I can't say yes. I need more information. So technically, the answer is no. Because anytime you defer and you don't know, the answer is no, correct? So technically you could say the answer is no, because we need more information, and right now we don't have it. So when in doubt, we stay out. That's it. So right now, as of the vacuum that we're trading in, the answer is no, because we don't have more information. When we get more information, it's going to help us make a more informed decision. Okay? So let's get more information. This is the same chart on a higher time frame. This is the 15 minute of the same chart. Okay? 15 minute, same chart. Your opinion might change now. Maybe. Possibly. Probably. Now I have the information I was looking for. This topping tail is that little double top that we see, right? The green bar is the high of the day. The topping tail is the double top. That pullback right there, right here, that pullback, see it? That's the 2 minute. Remember, there's like 3 bars on the 15 minutes. So what's that? 20 bars on the 2 minute, give or take? What do we have? 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. Oh my gosh, 20 bars. Imagine those 20 bars. They look like 3 bars on the 15 minute. Okay, so now let's go here. Now it's all on one page for you. That was the sell setup. The 2 minute sell setup failure signals the 15 minute buy setup entry. Right, PS? You were spot on. You were dead on. Looking at the higher time frame 15 minute chart keeps us out of a potentially bad 2 minute sell setup. And yet, it's okay to do it here to stay out of the sell setup. It was okay to stay out of the sell setup here because of the 15 minute, but somehow, some way, some reason, over here, it was acceptable to take the 5 minute buy setup inside of a 15 minute sell setup. How was that okay, but this is not okay? Got to answer for yourself. It's the same thing. But in reverse, in opposites, it's the same thing. Guys, this 15-minute buy setup could fail. It could. It could absolutely fail. Just like the last 15-minute sell setup failed. Right on the last slide, the 15-minute sell setup failed and the stock went higher. Couldn't this 15-minute buy setup fail and the stock goes lower and all of a sudden this works? Yes. But the concept is identical. Identical concept. And now you guys are all on board on this slide, but on the last slide you weren't. See where I'm going with this? You have to be consistent. You have to be as smart as a trader. So when I see this, there's a couple of things I don't like. I don't like the retest of the low of the day here, right? There's already an area where the stock bounced before. And then the bottoming tail is right here. That's that small little bounce up right there. Your entry's right over here. Stop loss is here, and you're triggering a buy setup. This would be a horrendous, horrible sell setup. But if you traded in vacuums and never looked outside of your vacuum, it would potentially look like a quality 2-minute sell setup. But it is not, because it's actually triggering 15-minute buy setup. The failure of the sell setup triggers the buy setup. As a rule, the failure of the lower time frame pattern will signal our entry on the higher time frame. For me, this slide, and there are 667 pages in PTS, this is a top 5 or top 10 slide for me in the entire book. Okay? It's a top 5 or top 10 slide in the book because it shows you the importance of multiple time frames. And for me, multiple time frames is one of the most important concepts, right? We have several what I would consider bellwether concepts. Money management, always number one, right? We have multiple time frames. That's a huge concept, okay? And relative strength and weakness is another huge concept. Not every concept is equal, right? Yes, they're all helpful. Bottoming tail, helpful. Volume, helpful. But there are some concepts that are just really, really important, okay? And this is one of them, all right? Read the candle wicks. Let me ask you a question, Dana. Is the wick part of the range in which the stock traded? Yes or no? Is the wick part of the range in which the stock traded? What would you say to that? Yes or no? I'll give you a hint. It's a 3-letter answer, not a 2-letter answer. If it's part of the range in which the stock traded, then of course, it's valid. It's relevant. The stock traded to that area. How can we just ignore that area just because it's not the body of the bar, it's only a wick? It's as if it didn't happen, right? Of course it happened. Shares were printed there, which makes it valid. You have to respect the wick, right? Respect the wick, okay? So, I hope, and like I said, today would be a little bit shorter. I hope that you guys learned, and this is just put in here in this way, in this order on purpose. Because many, not all, many of you fell down the rabbit hole. Hey, let's give them an example of something they might consider taking first, and then let's give them an example of something they would never take second, and yet both examples are exactly the same. That's not smart trading. That's inconsistent trading. Don't try to pull the cheese from the trap in your trading. Take stocks that are high quality, high odds, and have good room. I understand there's a lot going on in the trading day, and I understand it takes a lot of discipline. But once you start doing this over and over, it becomes unconscious competence. Right? We have those 4 levels, those 4 stages where we go, there is unconscious incompetence. That means you have no idea what you're doing and you don't even know you're doing it. Or you're just lost. That's called la la land. Then you have conscious incompetence, right? So you have unconscious incompetence. You just don't know anything. Then you have conscious incompetence. You know you're doing the wrong thing, but you just don't have the knowledge yet to change it. Okay? Then you have conscious competence. That's where you're really focused. That's like a baby walking. They think about every step. They're competent in that they can walk, but it's still something they have to think about. And then you have unconscious competence, which is breathing and walking for an adult. You don't think about breathing. You don't think about walking. You just do it. It's so ingrained. It's so natural. You do it. That's where your trading needs to get. And the reason I'm commenting on this is if you learn the wrong way, you're going to have to go back a couple steps, right? You're going to have to go back a couple steps and be at the the conscious incompetence stage again. And you don't want to go back there. Learn the right way the first time and you'll get to the unconscious competence sooner, if that makes sense. All right? It's so easy putting these things together, multiple time pattern, lots of different putting. It's true. It's easy when you do the work, if that makes sense. You're going to have to do the work. You're going to have to literally break this down. And in the beginning, it's going to be challenging. You're going to have a checklist, and you're going to forget certain things on the checklist. Okay? I post a YouTube video. There's like 7 things I need to do to post that video. Sometimes I forget one of those. Write it down on paper, you'll never forget. And then eventually you do enough of them that you don't even think. It's like check, 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 check. When you get into your car, do you think about putting your seatbelt on? No, your hand just reaches over and goes click. You don't think about it. Do you think, hey, where's the start button on the car? Right? Where's the key? No, you just do it. You don't even think why, because you do it every day, multiple times a day. This is where you need to be on this. Okay? This is where you need to be. And when you get there, you're going to be like Stefan, making 280 R a year. That's nuts. 280 R a year. All right? So I am hoping, okay, that these types of lectures will speed up that process. Why? Because I'm putting it right in your face. Like, look, this is what some of the things you're doing wrong. Start fixing them. Start changing them. Okay? And this is how you're going to go about the change. Cliff's coaching group is a great way to start that. A trading buddy, an accountability partner is a great way to start that. Reviewing charts over and over and over again is a great way to do that. It's going to take time and, most importantly, repetition. The more you do something, the less you have to think about doing it. You just get used to it, right? I'll give you one quick analogy before I let you guys go. I like cars. You guys know this. I was at a racetrack the other day, and it was the first time I was in a car, in this specific car. It was a Radical. And there's a corner, a compound corner that's flat out. I mean, to the floor, like Eau Rouge in Formula One. The first 5 laps, I did not have brass in my pocket. I come into the pits, adjust the tire pressures, and the guy's like, look, you're flat out through there. Trust the car. Trust it. The first time, you're going to be a little bit scared. But as soon as you do it once, you'll do it every time. Sure as shit, he was right. It took me a couple more laps to build up to it. I went through it flat out, and it was no question after that. In fact, it became probably the easiest corner on the track afterwards. But it took me 6 or 7 laps to build up, the confidence of someone telling me the car will handle it. You can do it. You do it one time, it was over after that. Guys, you get this right. You put the time and the effort in. You follow that plan for a month or 2 properly. You won't think about breaking it ever again. I don't mean 100%. We're human, we'll make a mistake. But I mean most of the time, 97% of the time, you'll do it. And that's when you get to a point of unconscious competence. You don't think about it, you just do it, and you know it's the right thing to do. Okay? So, I hope these lectures help you guys. I hope today's will get you to think about what to do and what not to do. Remember, I say it frequently, think about the reasons not to take the trade, not the reasons to take it. Okay? That will help make you a better trader. All right? I'm Jared Wesley of Live Traders. We'll get back at it again next week.